Hey everyone, this is your stock market recap for September 1st, 2011. My name is June, and as always, Chris is here.
Hi, everyone.
All right, so it's the beginning of the month, beginning of September. Kind of a slow start. I guess you can say that the market's down beginning of the month. Could be the last minute vacationers. Next weekend or this coming weekend is Labor Day weekend, and then tomorrow is the Friday before the weekend. So as far as trading is concerned, you're probably going to see some light volume trading into tomorrow, and which means that I don't expect a whole lot of trading to be going on tomorrow. At least that's what I don't expect. I'm sure some people might take an early Friday off and get a 4-day weekend instead of just a 3-day weekend. So with that said, you have to keep these holidays in mind, especially like Labor Day, Thanksgiving, Christmas, stuff like that. And you have to realize that trading might be a bit light before a major holiday. So with that said, let's go ahead and take a look at what's going on today. Last time we spoke, we said there's two possibilities that's going on. Either A, that there might be some kind of a double bottom forming, okay, back here. And then on that Tuesday we spoke, it broke out above that double bottom resistance, above the resistance here, held for a day or two, and then today it fell back down. And we said when it falls back down underneath the breakout level, it's not as bullish, or the implication isn't as bullish, right? Anytime you want to see a breakout, you want to see it hold above a breakout level. And the other scenario, which is a bearish scenario, means that this market is still in some big consolidation correction pattern, basically just a rebound to correct this decline, and it's fitting nicely in this rising channel. And you can see that there's some pretty strong resistance. I told you guys around the 1230 level, which is on the upper side of this upper channel, as well as the 50-day moving average. So a lot of overhead resistance right around this area. So until the market can really get above and close above that area, then the correction pattern is still holding pretty strong, or a valid correction pattern to this decline. All right, so usually you get this choppiness, and you can kind of tell when the patterns or the moves are choppy. That usually indicates correction or consolidation, as opposed to building a new leg higher. Okay, so that's the difference. Now, let's kind of go into a shorter time frame to see what we can expect for tomorrow or the coming days. Quite honestly, not a whole lot. Now you can see the market is not so overbought anymore. It's coming down, and I think if we get some follow through, and that's always the main thing. Even though today on the daily view we flashed a bearish engulfing pattern, right? You have a large dark candle that completely wrapped around a previous small candle. And that's a reversal sign, especially a reversal sign near a resistance level. That provides a little more significance, kind of like a bullish reversal signal near support. Okay, so the opposite is true. A bearish reversal near resistance could mean some resistance or strong resistance up ahead. But the main thing here is, even though we see that, we want to see some follow through. So that means we want the market to trade underneath today's low to indicate that this was a stronger or more important bearish engulfing pattern. And that's always the main thing. Just like back here, even though we had a morning star, we wanted to see a trade above, which it did, and then we had some follow through towards the upper channel here. So more than likely, if we do get that follow through to the downside, we can probably bounce around back towards this bottom of the channel, possibly even break it. Okay, if we are done correcting, and this is a typical pattern, right? You get this kind of A, B, Z, C, or zigzag pattern. Once it's done, then it can resume the leg lower, and that's a possibility as well. So a lot of things going on. So we're basically right at resistance. If for whatever reason the market can actually stay above here and build some kind of a base or a flag, then there's a good chance it can break above it. Okay, so keep that in mind as well. So always, like we say, always stay nimble and take each day's new information and build upon the previous analysis that you have. Either it confirms or it validates whatever thing that you were thinking about in the market. Kind of lost for words there. Anything you want to add here, Chris?
Yeah, you hit it right on the dot, everything that you said, and when I hear you say things like that, it really goes in the mind of basically the market's just back into its range, and it has a if they can get some follow through tomorrow to the downside, um, then we're probably going to see it hit the lower part of that channel or something. But all it's just telling us is that the market is slowly rising up in that channel, but there's still a lot of choppiness going on and a lot of confusion going on. And going into like certain stocks, which we'll do later on, it's really tough to gauge long-term trades in this stock. Can you pause real fast, Drew? Tell me when
Yeah.
ready to count down there. All right, excuse me about that. Basically, what I just really want to focus on is that there's so much consolidation and choppiness right now and confusion that there's not a lot of momentum going either way, bullish or bearish. And when I'm looking at trades out there, it does feel like a lot of trades are kind of forcible right now. You're trying to force those types of trades. So it's going to be the same thing that we've been talking about for a while about being conservative in your trades, not trading too aggressively, and not doing as many contracts or as much positions as you normally do. And this is really the time where you're going to be times like this, it makes me become very disciplined in the markets, quick profits, and you could even say quick stops. You really don't want to do wide stops right now, especially with a lot of confusion going on, because there can be a lot of whipsaws. So I just like to stay disciplined, and you really want to stick to your rules and very tight money management rules.
Yeah, good point. And I mean, nothing has changed from whatever we said before. A lot of these rules, these trading managements, and these styles, it's still the same because the market hasn't really changed. The market is still consolidating, unless it starts moving. And let's say it starts moving to the downside, then sure you can be a little more aggressive to the short side or whatever the case is. Or if it breaks out, then you can be a little more aggressive to the upside. But I think we will probably get some more trading volume coming into next week after the long weekend here. So with that said, I think there's really not a whole lot of trades going on right now, given that either A, the stocks that made its move has already moved, and it's kind of late to go in. And so, what do you do now? What do you do over this 3-day, possibly even 4-day weekend if tomorrow's going to be flat? What I like to do is kind of clean things up, clean up your watch list, especially given a huge decline like this. Usually you want to just kind of see what has recovered. Certain stocks, if you look at it, recover a lot more, a lot better. For example, PSMT. I mean, this one actually didn't really break down and actually made a new high versus something that we've traded before like QLIC, where it's still under its 20-day moving average. So you can't be stuck to a certain stock, and I've said that before. Do not be married to a stock. Even though we traded QLIC, and even though it was great before, the fact that it's no longer good and the fact that it's much weaker compared to the market and compared to other stock tells me that, you know what, I'm going to throw this off my watch list. I shouldn't even be watching this stock anymore. On the other hand, something like PSMT, which I haven't really looked at before, is now on my radar. It's on my watch list because this is something that looks really good, especially given the market condition that we're in. This is something that's really strong. And you have to ask yourself, why is this stock making a new high? That's because someone's buying it, all right? Especially given the volume, whether it's institutional buying or someone with a really large trading accounts buying this stock. It doesn't really matter who's buying. The fact is someone is actually buying, and there's a reason why they are buying. I don't know the reason because obviously we don't have the first information. Being retail traders, we don't quite get the first info right away unless you have some inside info. But the fact is someone out there knows something about this stock that we don't, and it's apparent by the chart here. So we just follow whatever the chart says because the chart says there's people buying this stock. And let's say if the market does happen to break out or if it continues to chop, then this thing can actually continue to rise. And that's why I want to pay attention, clean out my watch list and clean out stuff that doesn't work anymore, like Rackspace, RAX, something that we used to trade, VHC, something we used to trade. So it worked back then, and it's not working now. So I would rather, like I said, PSMT, DLTR, Dollar Tree, right? Break a new high, right? That's something you want to pay attention to. Hansen, something we mentioned before, HANS, of course, MCD. So you have to ask yourself which stock have actually come back to its previous high before the breakdown, or even broke above it, like LVS, POT, close to it, right? CERN, CERN, CATM. I can go on and on, right? There's actually quite a few stocks that actually has either come back to its previous high or made a new high. And another thing about these stocks or cleaning out your watch list, so you get to see where the money is going into. Like back when we had that bull market, back in 2010, something like F5 and all these cloud computing, VMware, Salesforce, they were leading the market. Okay, they were the leaders, right? Netflix. But now, if you look at these guys, they're basically money has rotated out of these stocks already, right? You can tell that no one's really buying this stock. So you have to understand the leaders before, once, especially after a big, huge decline, basically every stock gets washed out, and then not every single stock gets to rebound as strong. And the leaders before do not always become the leaders again. New leaders can emerge as a result of these declines or these washouts, whatever the case is. Okay, so keep that in mind, right? Something like Fossil, which led before, now it's trying to rebound. It's not doing that great, right? Like I mentioned, going back to PSMT, didn't really have, it rose in 2010, not so much here, but now it's starting to pick up, right? So this could be a new leader into if, let's say, the market does rebound, then this could be a leader. Same thing with Dollar Tree, Hansen, etc., the stuff I already mentioned. Chris, do you have any stocks you want to talk about?
Yeah, actually I have a couple.
Yeah.
First stock I want to take a look at was GS.
Oh yeah,
And
that's a good point. You're going to remind me. I'm going to mention something about banks.
Exactly. Yeah, and I won't go too much into it, but GS is a stock that you guys know that I like to day trade, especially with weekly options. And if we get some follow through tomorrow under today's low, probably looking at more out of the money put options, weekly put options, especially since tomorrow's Friday, and you'll just be amazed at the 110 out of the money put options, the 105. They can be as low as 20 cents or 10 cents, and if it just makes a nice move towards the end of the day, they're up about 40 cents or 50 cents, and you can just get out and it's a pretty fast trade. And, you're kind of scalping here and there, but something that it's a nice little strategy I like to use, especially on Fridays when they're expiring. The next stock that I want to take a look at is GDX. This is in relation to gold. Especially with these choppy conditions, we could have some more buying into gold, and 64 is the top of that resistance line, and if GLD gets some more buying into it and GDX breaks above 64, it's definitely going to be a pretty good play from the long side if you were looking to take a stab at gold. And then the last stock that I'm taking a look at is BHI. This is basically if we're banking on the point that the market from the bearish engulf pattern is going to hit the low of that channel. BHI formed the bearish engulf at the 20-day exponential moving average. And, we'll see if we all know that when stocks are in a downtrend, they like to use the 20-day EMA as resistance. So we'll see if this is a failed break and it's going to get some selling into it. Definitely want to see some confirmation by move under today's low. Now, most of the stocks that I mentioned are bearish except for the GDX trade. That's what I like to do also in these market conditions, is maybe have an equal number of longs and shorts. And June's going to go into something very similar to that right now.
Yeah, I think it relates to the banks, and I know a lot of people are, bullish on BAC, but still, you still want to rely on the charts. Okay, you don't want to just dive right in just because Warren Buffett dove into. Okay, so you always have to look at the charts. If it starts breaking down, like I said before, if it starts to break or close under this gap, then maybe I'm not as bullish into the stock. It's still under the 50-day moving average, so keep that in mind. But it's still basing, the the base is still valid here. Now, let's say you bought BAC or you want to buy BAC. What you can do is, it's something that Chris mentioned before, which is called pairs trading, where you look at the stock in the same sectors. For example, some of the weaker banks like Zion here. Nice pullback towards the 20-day and huge bearish engulf, kind of similar to GS that he just mentioned. And you can short something like this at the same time while holding on to BAC. Okay, so let's say if Zion, like for example, Zion dropped 4.42%, whereas BAC only dropped 3.2%, for example. Okay, another one you can do is CMA. CMA is a little, it's also pretty weak as well, only back to its 20-day moving average. So that's something you can do if you want to hold on to BAC. I mean, the other thing is you can sell covered calls, but the call option in BAC is pretty low, so I don't know if that's worth doing. So, I mean, if you can do bear call, not bear call spread, a covered call strategy, in addition to shorting the weaker banks, at least that way you're hedged, right? You're not completely just exposed out there naked in the market with just BAC stock. Especially like we said in market conditions like this, you never want to be too exposed to one side. So if you bought, let's say, well, I don't know, like 1,000 shares of BAC, maybe you can short like 500 shares of this, all right, depending on the beta and other things like that. So kind of hedge itself out. So you can work out the numbers to see what's a good ratio of long to short that you think is valid depending on your position size. All right, so I mean that's pretty much it for today. Like I say, if tomorrow's going to be flat, I mean I myself will probably just take the day off, get a nice 4-day weekend, and just take some time off. I think, especially now that we are rolling into out the summer, trading should come back into it. We should get a better idea of what the market wants to do. But overall, continue to be light. Stay light out there until we get some kind of a breakage of either support or resistance. I mean, the market will just continue to chop around this area. So that's pretty much what I have to say. And just remember, Monday's a holiday, so don't wake up at 6:30 or 9:30 wherever you are. Anything else, Chris?
No, that's about it.
All right, guys. Well, you guys have a great weekend and have a great holiday weekend, long weekend. So enjoy.